Personally, I think that if there is a strike on Iran, gold will experience a small fluctuation, specifically an upward movement. So, have you noticed that gold just can't seem to drop? Hey, this goes for all those who follow the faith, all believers around the world. Listen up, you must be die-hard bulls on gold. You have to be bullish on gold with me, and stay bullish for many, many years. Let me tell you, your leader has already been bullish for 20 years. I've been hammering on about gold since 2004. Now it's 2026, and honestly, I've been talking it up for 20 years, and I've finally seen it come true. So let's keep watching for another 20 years together. Gold is in at least a 40-year bull market. The second big news is that silver prices have crashed again. Bitcoin and silver have both crashed so hard, there's no bottom. Haha. Bitcoin has dropped to 60,000. Bitcoin fell from 100,000 down to 60,000, and it's still going lower, and silver is the same. Silver has dropped from over 120 to around 70, and it's still going down. Why is that? Why does silver go up later and fall first? And why does it crash so suddenly all at once? Why is that? This is what I mean by the capital market. This is what capital is. Every capital market originates from gambling. All capital markets come from gambling. So don't be a bitch. Say that Bitcoin is an exception. Hey, what does all mean? It means all of them. All capital projects, whether it's Bitcoin, electronic currency, gold, silver, or oil. Whether it's the stock market or bonds, everything comes from gambling. Gambling is the root of it all. But traditional gambling has 4 major limitations, which make it vastly different from the modern financial industry. It's just like the difference between humans before using tools and humans after inventing tools. Worlds apart. So, what are the 4 major limitations of traditional gambling? The first limitation is the restriction on the number of participants. Traditional gambling has a limit on how many people can play. For example, bridge or mahjong can only be played by 4 people, right? That's how traditional gambling works. It's impossible for any number of people to play together. Traditional gambling tables usually have 2 to 4 players. So because of this, the number of participants is limited, and you can't play on a large scale. That's the first limitation. The second limitation is, well, it easily leads to resentment. Why is that? Because when we play mahjong, if one person wins, the other 3 lose, and those 3 will resent you. Or if 3 people win and one person loses, that one loser, well, the person who loses might not come next time because they know exactly who took their money. Who took his money? That's the second limitation. The third limitation is this. Wealthy people and those without money can't really play together. There's an economic or ability or financial strength barrier. For example, between me and the viewers of my channel, say a food delivery guy among my audience, we simply can't gamble together because I have way more money than he does. I think if you're going to make a normal bottom fishing move on gold, personally, I feel like you need at least $50,000 to play with. Like just snapping your fingers. If it's close to $50,000 or a little less, what are you even playing for? That's not going to work. If you think you can play with $10,000 or even 50 RMB, does that make sense? You can't play like that. How am I supposed to play with you for 50 RMB? It's like playing mahjong. Let's say, for example, I can't even play with my grandma because for them, it's just 50 cents, 10 cents, 50 cents a round. How do you play like that? What are you playing for all night, 10 or 20 bucks? That's just not interesting anymore. So that's the third limitation. Now the fourth limitation, and then there's the skill level limitation. Traditional card games are serious about this. Yeah, it's strict, even harsh. If your skill level is different, you just can't play together because how would that work? If someone is that quick with their hands and mind and you're not, aren't you just going to get slaughtered playing alone? So this is the reason why traditional gambling and casinos can't really evolve. Then it reached America, the Wall Street era, the era under the buttonwood tree, and even the Dutch tulip mania in 1783, it evolved. The biggest sign of this evolution was the emergence of the dealer. The dealer appeared. The appearance of the dealer was something that never existed in traditional card games. There was no dealer in traditional card games. For example, when you play mahjong, the east position isn't called the dealer. So what is a dealer? A dealer is someone who sets up the rules and framework for the gambling and also completes it. A dealer is essentially someone who organizes the gambling and handles the settlement of bets. That's what a dealer is. The English term for zhuangjia is house. With the appearance of the house, everyone else becomes the opponent of the house. This marks the beginning of the financial market. The financial market has started and the house has a fundamental responsibility. You might say, Lao Wang, this sounds like Italian football betting. And you're right. Italian football betting is a classic example of a new financial market. First of all, you are no longer limited by the number of participants today. For example, AC Milan versus Inter Milan, no matter which teams are playing, as long as people have differing opinions or are interested in the outcome, anyone can participate. Whether it's 100,000 people or 1,000,000 people, the house will set the odds for you. Everyone just gets involved. If you think one team will win, you bet on them. There are no restrictions on the number of participants. Second, there's no distinction between rich and poor, no limit on the scale, none of that anymore. You might say, fuck, I'm a billionaire, so I can bet more. Or, I'm just a worker, so I'll bet less. Third, there are no restrictions, no limits on the number of people or the scale. There are no technical limitations either. In fact, fourth, there are no technical barriers. Second, there's no possibility of compensation. There's no need for compensation anymore. If you gamble, you accept the outcome. There's no point in holding a grudge. You don't even know who took your money. All you know is that you lost the bet. You placed your bet, and when the results came out, your money was gone, just like that. You realize you bet on the wrong person, but you don't hate anyone in particular or blame someone for taking your money, motherfucker. That doesn't happen. So this is how things started to evolve, evolving into the capital market, getting closer to finance. Gambling on soccer, Mark 6 lottery, pigeon tickets, welfare lottery, all of these have a house. They're all run by the house. So when I say this, if you take it one step further, you get to stocks. That's what it is. Commodity exchanges and stock exchanges. Just like with Bitcoin exchanges, there's always a house behind it. There is always a house behind it. Take gold, for example. The Royal Gold market is controlled by the 5 major market makers. Internationally, there are 5 big houses, and these 5 big houses are actually in cahoots. There are no Chinese among them, not a single Chinese. Before the Henan people got involved, diamonds also had major houses controlling the market. There were about 20 international diamond price quotes, and those quotes came from them. They set the prices, and you have no say in it, no room for choice. You can only decide whether to follow or not. Whether you play along or not, that's up to you. So, in the international gold market, there are 5 major houses. Now you might ask, what about the international silver market? Are there houses controlling it? Of course there are. Yes, the international silver market also has its own major players. So why does silver rise when gold rises? It's the same logic. Everyone comes to speculate and buy. But then why does silver drop so sharply? And why do they insist on crashing it completely? Because the major players in the silver market can't hold out anymore. The demand for physical delivery in gold trading is almost zero. That is, in the international gold trading market, except for the Shanghai Gold Exchange in China, most other gold exchanges basically have no demand for physical delivery. It's all just a paper game, so the pressure is very low, but it's different in the international silver trading market. As everyone knows, internationally, silver is used not only in China, but also in the United States as an industrial raw material. Silver is an important industrial product. Besides its financial attributes, it is actually a commodity. If you all make such a big deal, if there are so many buyers and so many long positions, then the so-called Chicago Mercantile Exchange Group, which is the COMEX in New York, won't be able to deliver to you. In other words, you've pushed the dealers to the point where they have to play dirty. To put it another way, if I'm the dealer, I could just say, damn it, today AC Milan wins. Then I set the odds, and it turns out everyone bets on AC Milan to win, damn it. Wouldn't I lose money? If everyone is right, then AC Milan has to lose. If AC Milan really wins tonight and all the gamblers in Italy and around the world bet correctly, wouldn't I lose everything, even my underwear? Do you get it? That's how simple this logic is. So how can they make such accurate predictions? The bookmaker doesn't need to predict accurately. They just need to follow the law of large numbers. It means that 80% of people's choices will be limited to 20% of the range. This is called the law of large numbers, also known as the Gaussian bell curve. All casino bookmakers only need to focus on that central 20% range. They don't need to worry about what's outside the 80%. There's no need to consider it because everyone will choose within that concentrated area as long as they cover all of that. He just needs to cast a net and catch that group of 80%, and that's enough. He won't lose, but what is he afraid of? He's afraid of special situations where the Gaussian bell curve is disrupted. The reason this state can be maintained is because no special situations have occurred. If a special situation does happen, the normal curve collapses. Now, with everyone rushing to buy silver, that's exactly a special situation. That is, what the fuck? Everyone is not following the dealer's playbook anymore. So all these long positions people are taking, especially the ones led by the Asian markets, the demand for physical delivery of silver has already exceeded the physical inventory held by COMEX. This kind of situation has happened before in history. It happened in 1981 and also in January 1980. Why 1981? Because at that time, there was no China, no Chinese investors involved. Back then, it was the Hunt brothers. Back then, the Hunt brothers were the richest people in America. The situation was just like today. They insisted on buying silver, buying so much that it forced the issue. In the end, the Federal Reserve had to step in because the Hunts were extremely wealthy, the richest in Texas. They forced the chairman of the Federal Reserve, Paul Volcker, to announce an interest rate hike, and the US dollar entered a rate hiking cycle, just like today. It's just like when the Fed chair announces balance sheet reduction, raising interest rates and reducing the balance sheet have the same effect, and he went ahead and announced a long-term balance sheet reduction. In 1980, I raised interest rates for the long term, and that's how I dealt with you. If I didn't, COMEX would have collapsed. COMEX would have gone under. The financing banks behind the COMEX market makers would have gone bankrupt. How many financing banks are there among the US silver market makers? They're all involved in it. It's those big commercial banks you see on the streets of America. At least two of them wouldn't be able to withstand it. So they will keep fighting you until the end, until you start doubting your own life. Only then can they force the short sellers to capitulate. That's what deleveraging is. They have to completely crush all the leverage of the short sellers before they can keep their exchange running. Otherwise, their casino will collapse, they'll go bankrupt and just pack up and run away. This is exactly why silver rises later but falls first, and why it drops so sharply. This is the real macro reason from a macro perspective. There might be some details, like the order of events or the people involved. Those details might change, but on the big picture, this is the reason. Don't bring up anything else, right? Oh, what? Things like the silver bull market will never come again, or the gold bull market is gone. Stupid. How can anyone say such bullshit? You see, after it gets beaten down and cleaned out, it rises again. It comes back up. Of course, gold always rises first, and then silver follows. The enthusiasm for silver, well, the enthusiasm of Asian investors for gold and silver is like a dick. It gets hard in no time. Why? Because the US dollar softens just as easily. It's all relative. This is also a new problem that COMEX is facing now. COMEX didn't have this issue before. Yes, they've encountered this kind of problem, but the cycle in which this problem has emerged is so slow that everyone thinks it's something new. What problem is that? It's about America's national strength. Every few decades, it faces a powerful challenge. The last time there was a major bull market in silver and gold, the US dollar was weak because the Soviet Union, the former Soviet Union, posed a strong challenge to the United States. That was in the late 1970s and 1980s at the peak of the Cold War, when the Soviet Union's national strength was on the rise. The Warsaw Pact, led by the Soviets, had military power. Its conventional military forces had actually surpassed those of the United States. Moreover, in terms of nuclear weapons, both in yield and in number, the Soviet Union also surpassed the United States. At that time, the US had also been defeated in the Vietnam War, leaving it battered and demoralized. Even the US presidents could not withstand the pressure and were forced out of office. So, after the 1970s, the US dollar was actually in a very weak position. Of course, after President Reagan came to power, he managed to bring down the Soviet Union with the Strategic Defense Initiative, also known as the Star Wars program. But that happened a decade later. So every time the United States faces a world-class challenge, whenever the global order established by the US is challenged, the dollar weakens and gold becomes strong. Of course, it's always gold that reacts first every time. Once gold becomes strong, silver thinks, I can do it too, and it rises as well, but then it gets its legs broken, so to speak. In fact, last time, gold also got its legs broken. Gold was beaten down for 20 years, from the 1980s all the way until 2004, which was when we were growing up. In 2004, as we were growing up, we realized at that time in Beijing, we mentioned the China Gold White Paper, which we wrote. The China Gold White Paper stated that gold in China was about to usher in a historic bull market. What we did in 2004 was extremely bold. Why? Because we saw the rise of China. If China continues to rise while the West declines, China will eventually become a true challenger to the United States. If everything ends up being made in China, then sooner or later, wealthy Chinese people will realize that investing in real gold and silver is more reliable than investing in US Treasury bonds. It's more dependable.